Hi, this is Pat Walker at Mission Winners. You like to buy leading stocks. Leading stocks predominantly come from leading groups. So by default, isn't it good sense to look at leading groups, in this instance ETFs? Gives you a feel for what to look at and what to avoid. And both things are really important. So here we go, let's take it. Genomic, this is a biotech ETF, it's labeled here, hanging in there good. If you like to get involved with biotechnology, an ETF is a good way to go because it provides diversification, potential blow up. Cloud computing's lagging a little bit, all right, with the market pulled back, starting to bounce off the moving averages. The trend is still up though, you know, that's fine. Telemedicine, look at this. This is related to COVID-19. Look at how this thing's been steadily moving up. There you go. What does that tell you? It's an area to go. IBD 50, look at this, leading stocks. And look at how it's lagging, or was lagging, and it's starting to pick up. That's a plus. It shows more of a risk-on environment in the market, and that's good. But I'll pause here and share this with you. Please, don't get euphoric. I encourage you, please don't ever get euphoric and giddy like, oh man, we're just going to go, go, go. It's great, but always have discipline. Rules to get in, rules and tactics to get in, rules and tactics to get out. And always know this, if you don't have the discipline to follow those rules and tactics, you'll get in trouble. Just wanted to share that with you. Here we go. This one focuses on the max list stocks too. Looking good. Nice to see. Gold miners. This is choppy. Leave it alone. Up, gives it right back. There's a rhythm here. I made a video for the VIPs on this. Goes up, runs up, gaps down, runs up, gaps down, runs up, gaps down, runs up, pulls back, runs up, gaps down. Gosh, I said that a couple of times, didn't I? Just be careful with it. Same thing's true with junior gold miners with the gaps. And gold, look at that. There's another valuable lesson for all of us. Don't chase price. Buy right coming out of a base. Don't be careful chasing big gap ups. There were people that bought this up here at around 182, 183. You know what, folks? That hurts. That's 10 points. That's a haircut real quick. So always control risk. Can't stress that enough. Biotechnology related to COVID, hanging in there good. North American technology starting to pick up. That's good. Medical, another one, looking good. Home builders has been really strong and starting to get choppy here. It's lost some leadership. Is it going to continue? We don't know the future, do we? We just get in line with what is. And what's it telling us? It's lost leadership. There's better places to put money. This one owns a lot of big tech names and max list stocks. Looking good. Small caps, more of a risk-on type of environment. Isn't that nice to see? Like to see that. Mid cap, more of a risk-on type of environment. What does this tell us, team? This one right here and this one right here. What does it tell us? Investors are putting money to work, even in slightly riskier assets. There you go. That tells you to go with it. Oil services hanging in there good. Online, retail, hanging in, pulled back a little bit, but it's still fine. Pause here again and share something with you. There's a lot of news going on, you know, with the election and the stuff that's happening and Twitter and all that other stuff. I'll share this with you. If you get wrapped up in all that, you'll have a bias about stocks and the markets. Let the stocks guide you. I'm not telling you to avoid the news, but don't dive into so deep that it influences your decision making in relation to the stocks, okay? Price and volume talk. I say this all the time. I was an IBD meetup co-leader for 12 years. People talk with their mouths and vote with their pocketbooks. Go where they're voting. Go where they're voting. There you go. That'll help you. Software's hanging in nice. Nice trend. That's good to see. Technology related. Look at this. QLD. Grinding on up. Nice to see. QQQ. Similar situation. By the way, I love this ETF. I will just tell you. We have made a lot of money on this ETF through the years. QQQ. It's great too. Why do I like QLD? It's the NASDAQ 100. You own the NASDAQ 100 with 2-for-1 leverage, and it's plenty liquid, folks. That's huge. Cloud computing, hanging in there. Silver, just related to gold. Silver and gold. Okay, I won't sing because you all get mad at me. There you go. Steel, slowly grinding up. Nice to see. Software, or excuse me, semiconductors, gapped up and tailed off a bit. The trend is still up. Here's another classic example. There were people that got emotional and chased this up here. Is it going to stop and continue going up? Maybe. But if it keeps dropping down to the 8, all of a sudden you got yourself a decent loss. Buy right. Buy at the right spot, or don't buy it. Don't chase price. Spiders close near the highs. Good to see. SSO, similar situation. Love SSO. Solar, hanging in there. Nice break here. Going. This catalyst right here, because this is also a leading group, caused us to buy some solar stocks. And like DQ and things, it's worked out well. TNA, small cap leverage. Aerospace, just going sideways. That's still okay. Biotechnology, again, good. Home builders, chopping around a little bit. Trend is still up. Materials, look at this. Grinding on up. That's good to see. Communications, going sideways, forming a nice base. A little bit loose here. See this bar right here, by the way? I want you to, this is a good lesson for us. Gaps up and drops hard on a pickup in volume, met with selling pressure. This was good buying pressure here. This consolidation is still intact. Watch it to see if it takes out the tops. If you're interested, and you say, I'm not interested in an ETF, but maybe you'd be interested in stocks that are communication services stocks. There you go. That's connecting the dots. Energy, hanging in nice. Good to see. Financials, doing fine, trending nice. Industrials, hanging in nice. Technologies, hanging in nice. Consumer staples lost a little bit of leadership, but the trend is still up. Utilities lagging. Flip the coin. Utilities is defensive. It's been lagging a little bit, starting to lag a little bit. What does that tell you? Money is becoming more, quote unquote, aggressive, growth oriented. Not reckless, but it's just so neat to go through this and see where money's going and where money's leaving. That will help you. Healthcare, doing fine. Consumer discretionary, doing well. And it has been doing well. I want to show you something here. Here's consumer discretionary. This is monthly. I'll do the weekly. Bottomed in March and it's been steadily. Folks, this is discretionary spending types of stocks. Okay? Not food type of stuffs. Discretionary. And look at this grind. Look at this nice steady move on a weekly chart. So, the consumer's dead. Everything's awful. That's not what this has been saying for a long time. That's why I watch the charts. So just wanted to share that. And I hope that helps you. Metals and mining, hanging in fine. Retail. If the consumer's dead, that sounds like an awful phrase, and I don't mean it that way. But if the consumer's just kind of covered it up and, not doing anything, then how come retailing's at an all-time high? That's why we look at the charts at Mission Winners. It helps us. Software, doing fine. Technology related. That's why we've been involved in some software through the time. And we're back to the top. I wanted to share this with you. I hope it helps you. Just framing up the action. What to concentrate on. And also, just as important, what to avoid. Helps you make money. Helps you hang on to your money.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.